This is Eric Mwatha with Mwatha.com. It is February 21st, 2013. We have about 20 minutes before the market open, and this is how the markets are shaping up. And just seems like it's going to open a little bit to the downside. Wanted to share with you some of my thoughts as we go into the trading session. Now, this is the chart for the NASDAQ weekly chart. And what we had been talking about over the last couple of weeks was the fact that on the RSI, this area here has been trouble for the market. It stalled here, which is that price level. It stalled again here, which is the highs, and it's stalling again exactly where we would expect it to stall. So that tells me to really be careful here. Also notice on a weekly basis, the breakout level on the NASDAQ was 3091.57. We are now back below that price. So that's the early signs of a failed breakout. On a day-to-day basis, the magnitude of any drop in the coming days is going to depend on how the market responds to this 50 level on the NASDAQ. If it drops below 50, you can see before the trading session begins, the NASDAQ is trading at 52.48, so very close to 50. It's one of the major averages that is very close to 50. So a slide below 50, you expect to see another big day to the downside. If you take a look at the Dow Jones from a weekly chart, remember we had talked about this 14,000 level, 14,009, and now we are back below that. Also notice that on a weekly basis, this is where you'd expect trouble. And you can see that the market is coiling in a very uniform action, probably back below that line. If it does, that's another sell point on the RSI, and the market pulls back. How much it pulls back, we are going to have to wait and see. The S&P 500, similarly, the weekly chart is telling us to really be careful here on the long side, because this is where we are supposed to stall, and we are stalling on Q. Also take note of the fact that the highs on the RSI there and there, you draw a straight line, you see that the market is hitting that level precisely where there should be natural resistance on the RSI. And also the fact that it's going to probably move back to this wedge, which means this was probably a trap. And it's going to take a couple of weeks before we actually do confirm that. But as far as I can tell, there's very early signs of this RSI level here stopping any further movement in the market for now. If you take a look at the QQQ on a weekly basis, you see that we have 5 months between this left shoulder to the head and 5 months between the right shoulder to the head. So this is a perfectly looking head and shoulders formation, not what you want to see. That suggests to me a market that's going to break this trend line in the coming weeks. If you take a look at the QQQ from a daily view, you'll see that again, you got left shoulder, head, right shoulder, and now we seem to be breaking below this wedge type formation here. Also notice that it's very close to 50 on the RSI, so any further slide here is going to be for a big down day on the market. Last time it broke below that level after making highs was here, beginning of October, which corresponds to this big drop here on a day-to-day basis. So any slide below 50, markets move lower. I wanted to touch on a little bit on gold. And what we see that gold is now, excuse me, trading below 50, slightly just below 50. So depending on whether it can defend that level or not, we might continue seeing that slide. Remember, if it really is true to form, a slide below 50, as you've been noticing, is really destructive to charts. And that means a big month close to the downside. Last time it closed below 50 was here, which happened to be one of the bigger drops over the last couple of years, which is that level there. So it depends on how if it defends 50 successfully, it might move higher. As of right now, it looks like it's really on the break level, and so we might expect to see it move lower. Also, what's different this time is that you see that the MACDs are breaking down here, as we've been talking about, and also moving to 3-year lows on the MACD. So gold should continue being under pressure to the downside. But remember, it's really going to fight for its life. So it's not going to be as easy as it might seem in theory. But the charts are telling us that this is a serious break. Expect much lower prices in the coming weeks and months. Now, if the market is going to go down, the question becomes, do we go long? Do we go long the short ETFs? That's a question I've been hearing. Problem to me is that they are not giving me any buy signal based on our minimum requirements. For example, take a look at FAZ. Has not even broken out above this blue line, which corresponds to highs going back more than 1 year. So there's no buy point or no buy signal on this ETF. So I'm just going to have to ignore them for now. Also, if you take a look at the FAZ from a weekly chart, you see that a buy point would come if it would break out above that line, short term. But we are so oversold here that frankly, there's no buy signal. And if that's the case, I cannot lead you into slaughter. So I'm going to not recommend those ETFs until at some point they give us our minimum requirements. Now, I just noticed that there was a price target that has been raised for Google, which takes it price target of 1,000. Now, if I remember correctly, didn't somebody just raise Apple's price target to 1111 when it was at 700? Sometimes these analysts really surprise me with their calls. Gutsy call, but man, they really do get this timing wrong. Let me share with you what I believe is going on here. Right now, Google is trading at very close to 800 in the pre-market action, but this is the weekly chart. This is the weekly chart for Google. Take a note of where it's been stalling, which is this green line here. Over the last couple of years, every time we break down here, the price would go down. We touch that level, price go down here, touch that level again. That was a high. We broke out here, so we had this nice run, which is this level here. So we did not roll over here. We broke out. And so we had a nice run. But notice that this thing could very easily roll over here with the market. And that would tell me at about 800, Google is probably looking at its highs for some time. This is Eric Mwatha with Mwatha.com. Good luck, peace, and blessings.